So here I'm just going to go over a little bit of the strategy and what it is we look for in price. So this was today's price action, Thursday, 16th of November, and we had economic data come out, which was unemployment claims. That pushed us higher. We had this bit of price action. Now, if you look at the price action from the day before, we actually had this crazy run up again from news drivers, bringing us up to here. And then we had this price action today. But the sort of things that we're looking for in this strategy and what I look for when I'm trading. So if you look up here, this was a high. Okay, this was a high from yesterday. What happened? You had this run up here yesterday as well, sorry. So it then dropped down. But these are like relative equal highs here. So that's always kind of, you're always looking at that potentially being run. So anyway, today we had the news come in, pushed us higher. That news was unemployment claims. It came in slightly higher than forecasted. So it pushed us up, US dollar down. Let's push up. And then I was watching this. This is a 15-minute time frame here. I was watching both this fair value gap here. I'm going to bring that way actually, just to demonstrate. And that would have been a bullish fair value gap because we're looking at that and expecting price to support it. You've also got this one in here, which is a bullish one. So you'll see here, if I put that there, and if I bring this one across. So what actually happened was we came up, we ran this liquidity. Okay, so there I'm thinking to myself, this could potentially be a reversal. But I'm watching this. So this fair value gap, I'm looking for this to support price or this. Now you see here this large down close candle, it just slices straight through there. Okay, there's nothing, there's no resistance there, there's no support. So I'm going to go down into a 5-minute time frame. So in here, again, it then doesn't look the same. This is the problem with people not looking at multiple time frames. You need to look at the multiple time frames to really get a full understanding, to really be able to frame your trade. So what happens in here is the price comes slicing through there. You see that we pick up some support in here, which is fine. You're thinking to yourself, okay, maybe we are going to get this push up higher. We get this failed swing. So again, I'm looking at this. So I'm watching the market in here. So this was a potential bearish fair value gap, okay? So if we were going to continue to be bullish, then I'm looking for this to come up through here, maybe a bit of support in here, and then push to make new highs. But we are aware that we've taken this old liquidity. So there's always the chance now that we've taken this liquidity, we do roll over. And it's been very bullish for the week because of the data that came out on Wednesday, which was consumer price index. This was for the US, by the way, and that came in, they were anticipating 4.7% inflation year on year, and it came in at 4.6. So the market responded to that, and risk assets and currencies versus the US dollar all rallied. So yeah, so we come down to this fair value gap. There's a potential we're going to push higher. We don't. We drop significantly lower. We've taken out this short-term low here with displacement, we call this, and we've also taken out this short-term low. So if I go back up to a 15-minute chart, once the short-term low has been taken, I'm saying, okay, well, I'm pretty bearish, okay? So in here, I'm looking at this going, well, there's major displacement. We've taken out this short-term low, we've taken out this short-term low. We've got liquidity under here, and this is a pretty soft low in here. Okay, so with this, I'm actually currently in a short just now. and my stop loss, I took it these consecutive up close candles. That's a bearish order block. So I'll just write on here. So the bottom of here, there is a bearish order block. So you're expecting that to repel price, and you see here it grinds back up, and then we start to roll over again. So that is what you kind of want to see from an order block there. We could have came up, but what I actually done was put my stop loss. So I'm taking 50% of this range, this order block, because I don't want to see 50% of it be traded to. So I actually took a trade off the bottom of this order block, so just in here, and stop loss just above there. I must have been in a bit lower because I just went for a 20 pip stop loss, so I must have been maybe just in, maybe, can't remember exactly, it'll be someplace like that. And it's just a basic, like 1.5 R, so 1.5 R trade. So we'll see how that one plays out. But this displacement, so I'm expecting from that low to this there, that's a bearish fair value gap where we broke a short-term low. So that's, again, I've stacked the confluences. So I've got this order block, 50% of the order block, and then my stop loss is up above the 50%, but it's also up above this fair value gap. So if price starts to come up and starts to move above here, it's a good job I'll have my stop loss in this position, because that I'm going to be wrong. There's a high probability that I will end up being wrong. If this starts to get traded up into, then it'll push higher. So you don't want to have a massive stop loss and extending your stop loss. You want to have a defined area that if price comes to that, then your trade is invalidated. So that would be it for me. If it starts to come way up to the top of this fair value gap, up at 50% of that order block, then I'm out. My stop loss is there to protect me, and it's quite low hanging fruit. I'm just aiming for the lows in here, but really we'll see. If I go up to a 60-minute chart, you've actually got all this space in here for us to come lower. We've ran that high, that could be the high of the week, and tomorrow we start to come back into this range just a bit. But really, I'll be happy just with my 1.5% on that trade. I think that's a pretty low risk sort of sell, and that's really what you want to pick up. You don't want to be trying to find the hardest trade. You want to just be finding something that's relatively easy going, big stop loss. This is something that people in the industry try to get entries, sniper entries they call them, really tight stop losses. And a lot of the time that I've learned, my direction is correct. The direction's right. I'll put a tight stop loss because you want to increase your returns. So just an example, it's a 10 pip, a 20 pip stop loss. If I bring that into a 10 pip stop loss, then there you go. It's a 3R trade. Right? So this is the problem. People want bigger R trades. It ends up going against them because that'll hit their stop loss, run a wee bit higher, and then it rolls over. So I like to go in now through hardship of learning, that we go in there with a bigger stop loss, give ourselves a bit more room to breathe in the trade. And I've found that to be a lot more consistent than trying to get those sniper entries. So that's that. That's all I'm going to go over for this. Just showing this liquidity. The market runs on liquidity. We've swept liquidity. Okay, so we're in this range from here. We can say the range is here to here, really, but that'd be sell side liquidity. Sorry, it would be buy side liquidity, and down here is sell side liquidity. So we've taken buy side. Now I'm looking for sell side to be taken, and And when you look at that, so if I take from that range down there to here and put a PD, premium discount, then I was still selling, whenever I took my short, I was still selling from a premium with a high stop loss, and I'm selling now into a discount. That's where my aim is. And it's always important when you get into a trade, you've got a target. It's easy, if this moves quickly, it's easy to think, oh, here it goes, I'm just going to hold. But the market can turn on a dime and it'll come down. You think, oh, I'm going to make heaps of money. And then it reverses, comes back up, taps your stop. And you're just left there thinking, what an idiot. I had my original terminus and I changed my mind. I've learned that the hard way as well. So that was just a little overview on EU and why I took this trade, looking for the shorts. Okay. I'm not wanting that.